Welcome back to Agribusiness with Dr. G. In this video, we're going to continue learning about financial documents. And in this particular case, we're going to take a look at a very complicated income statement. In a previous video, we went over a very simple basic income statement. And today we're going to look at one that's more customized for farm use, that is a little bit complicated and laid out maybe a little bit different than the one previously, but the general concepts remain the same. We start off with a title. This is the income statement for an awesome family farm, and it is for the 12-month ending on December 31st, 2025. Once again, an income statement is always going to be a statement for an entire accounting period, in this case a year. And don't forget, we see these things going by different names. We might see them called a P&L, which is short for profit and loss. So we might see this called a profit and loss statement. I've seen it called an operating statement. The main thing is for you to recognize what's going on and for you to be able to read the title of a document and understand what the document means. And to that end, I want to say that my goal is not to teach you how to create an income statement. My goal is not to teach you how to be an accountant or how accountants create these things. My goal is to teach you how to read and interpret these things for this video, because there's other people out there that teach accounting that can show you how these things go together and do a lot better job. My main goal here is to show you several examples so that you can start to understand how they're put together. As always, every income statement always starts off with revenue. It goes by different names. It may be called receipts, it may be called gross, it may be called sales. Whatever you want to call it, it doesn't matter. We start every income statement, every profit and loss statement, with a section showing the money coming into the business. So let's take a look at this one. This one breaks things down into crops. So we have cash receipts from crops and we have inventory adjustments from crops. We have a category for livestock and poultry. We have cash receipts for livestock and poultry, and then an inventory adjustment. Now, I'm not sure what's going on with that inventory adjustment. That could be related to cost of goods sold. That could be related to accounting for changes in the value of your inventory. In any case, we're going to put that down on this statement as a gain and a loss in the revenue in this case. We have other things that happen. We have change in value. We can correct our typos as well. Change in value due to raised breeding stock. So you're going to raise your own breeding stock. That's going to change the value of your farm operation. A gain and loss from cold breeding stock sales. Again, that's a common farm item that's going to go on the list. Government payments and other farm income. Hate to break it to you, but it's not unusual for farms, especially large farms, to get a significant amount of government payments. And it's also not unusual for farms to have other farm income. For example, farms might have machinery to harvest their crops, and when they're finished, they might harvest someone else's crop for hire. We call that custom harvest. So it's not uncommon at all for farmers to use their equipment to work someone else's property for hire. There's a change in accounts receivable. That's where some money came in as accounts receivable got paid. Then we total all that up and we have a gross revenue. If you remember, we had a cost of goods sold section in the previous example of our income statement. Here we have a section to back out purchases of livestock and purchases of feed and grain to go along with that livestock. And we back that out in order to get a value of farm production. So we're basically saying that our production on our farm unit was worth $405,000. Then we start breaking out expenses, cash operating expenses, which seems like a very generic category for all the things that you spent money on. Changes in accounts payable, changes in prepaid expenses, depreciation. Depreciation is a type of expense, and we list it on these documents as an expense. Depreciation will decrease your profit. And then we total up the farm operating expenses. And this is not different from any other example of an income statement. You total up the revenue, you make some adjustment for inventory, whether it's cost of goods sold or whatever the case may be, total up the expenses. Now we're going to break out interest expenses. It's a normal process to break out interest separately and have a total interest expense that we then add in order to get a total farm expense. So now we know that our farm spent $373,000 and they brought in $405,000. You subtract the two and we have a farm that had $32,000 of income from farm operations. Then this particular income statement puts down gains and losses on a sale of capital assets. That's got to be written down somewhere whenever you gain or lose money on selling a capital asset. And that gives us a net income before taxes. Now the next thing we have are some non-farm adjustments where we have wages, interest income, and income from non-farm activities. And that's a very common thing for farmers to have a job off the farm. And in this case, we're going to be putting that on the farm income statement. We total those up and we get a number. And we now have a total amount of income for the whole household unit, the farm, the labor of the farmers off the farm, the income from investments. For example, you might own some investments in a cooperative, and all that's listed as income before taxes and extraordinary items. Then we break down income and Social Security taxes. It's important to remember that if you're running a farm, you've got to pay your own Social Security taxes. It doesn't get deducted out of your paycheck like it does for a normal worker. And we end up with a total for our taxes, and we find that after taxes, this particular farm is left with $51,000 and roughly $800 of net income for the farm after they pay off all their taxes. And the thing that I want to point out to you is the commonality between this income statement and the other. It always follows the same process. We have a revenue group, and at the end of that revenue group, we have a gross margin number that shows the value of what we produced on the farm that year. We have an expense group, and we have a total of operating expenses. It's also very common to have the interest broken out into its own category so that we can have a total interest expense, and then from there get a total of all farm operating expenses. And then we find out the actual profit. We calculate profit before taxes, and then we take the taxes out and figure out profit after taxes separately. And because this is a farm that could be an entire household, there is a section for non-farm adjustments to our incomes and expenses. So there you go. That's a more complicated income statement or profit and loss statement for you to kind of have a look at. Thank you so much for watching. And if you'd like to go ahead and hit subscribe, you won't miss the videos as I upload them.